8. Exemptions. There are no exemptions of any kind in tax, government, law, etc. in the individualistic society. Equality means equality. There are no partial definitions. All individuals will be subject equally to the exact same forces. Section F. Company laws. 1. Corporate liabilities. In the individualistic society, companies will be judged for what they are, a collection of individuals. A company is no longer an entity in itself. All individuals of a company will be proportionately responsible for the actions of that company. Proportion will be determined by the current salary and amount of shares possessed by each member of the company. Thus, a great wrong committed by a company will be proportionately absorbed by all of its members. This makes each employee and each investor much more apt to become fully conscious of their company's actions and risks in great detail, judging whether it is worthwhile to be employed there or invest there. This will cause the extinction of many suspect, irresponsible, and deviant corporations unless they alter their methods of operation. This will also cause companies to adopt a policy of heightened responsibility as a company and as individuals, as well as announce more detailed information of their practices, which will assist the overall awareness of the society and take another step closer to individualistic unrestricted knowledge. This in turn will cause doubt to vanish in the minds of potential employees and investors, causing companies who do great good for mankind and are open about all of their practices to naturally receive an influx of employees and investors. Reducing corporate law down to just the individuals who compose it lessens the irrational complexity of modern law and brings it closer to individualistic legal simplicity. As an extreme example, one can envision an entire company serving labor force assignments for a corporate act of negligence which happened to cost the lives of a handful of people. Conversely, one could see hundreds of investors dumping money into a battery manufacturer who released the details of its cutting-edge technology and proposed methods of operation. 2. Corporate relations. All Populus employees and paid representatives must publicly disclose all of their investments and any addition or subtraction thereto throughout their entire term. They are excluded from any decisions involving companies in which they are invested. The personal investments of individuals in positions of these natures too often encourages favoritism and corruption. For example, FDA officials approving drugs from companies in which they own stock in, or shareholders of a drug company seeking employment at the FDA for that same reason. 3. Populus Purchasing. If there comes a time when the populace must purchase from private companies, it will do so only by public approval and vote on submitted contracts. The contracts will be clear and concise, and the amount purchased from the contractors shall be proportionate to the populace votes. For example, 4 companies submit contracts for 100 electric engines. 60% of the populace chooses Company A, 20% chooses Company B, 15% Company C, and 5% Company D. Thus, 5 engines will be purchased from Company D, 15 from Company C, 20 from Company B, etc. 4. Small business taxing. The individualistic society turns the power to the small businesses by lifting all business profit tax on any business under 100 people. All members of the company, from the employees to the owners, pay only the national flat tax of 12.46% plus their applicable state and local taxes. Thus, the entire company acts as one individual paying the same tax applied to every individual. All earnings not declared as profit by some individual in the company must be reinvested back into the company. This will assist small businesses in growing and competing with larger entities. Upon sale of the business or any of its assets, the owners will pay the 12.46% plus the state and local taxes as a capital gain tax on any profit from such sales. This ensures that any funds going into the company, no matter what form they eventually took, got properly taxed. Thus, throughout the life of one business, it will pay the exact taxes as any one individual. These taxes are the tribute to the society which allowed that business to profit initially. 5. Subsidiaries. Subsidiary defined. 1. A subsidiary is a company controlled by another corporation. When that control or ownership is not shared, it is termed a wholly owned subsidiary. Subsidiaries are distinct legal entities for purposes of taxation and other forms of regulation. Wikipedia. 2. A subsidiary is a company which is owned or controlled by another firm or company. Subsidiaries include firms in which a company owns more than 50% of the outstanding voting stock, as well as firms in which a company has the power to direct or cause the direction of the management and policies. U.S. Census Bureau, Glossary of Terms for the Economic Census. Subsidiaries no longer exist. Being that companies are no longer considered individual entities, they cannot own things. Ownership of any company asset is divided proportionately among its members. Too often, subsidiaries are used as deceptions to conceal the breadth of the control and interests of a corporation. Additionally, they act as protection for an already too large animal. A company can create a subsidiary and attempt a risky venture under a different name, and if they fail or cause great ill to the society, the majority of the society will never know who was responsible. Thus, a company must have only one prefixed name for all of its interactions, clearly identifying its presence. This will show the growth of corporations because the consequences of their actions will directly affect the individuals of the company and may result in criminal punishment instead of a mere payment of restitution or dissolving of the subsidiary, neither of which serves justice to the minds who initiated the act. Furthermore, this inability to conceal their actions slows expansion into questionable areas to which their customers would not agree, regardless of the profits which management may see therein. The setting up of an entity within an entity or outside of an entity controlled by that entity, partially or wholly, allots for many types of corruption. This subdividing of one entity countless times creates a myriad of loopholes granting the ability to conceal actions, profits, involvement, etc. Thus, a subsidiary is not but a corporate strategy to avoid and bend law, allowing for men to do great injustices to the world and to have a non-existent entity be punished in their place by mere monetary payments whose origin was from none other than the pockets of the exploited mass population. Thus, the people simply get some of their money back when a corporation does wrong. But in nearly all cases, no one in the company gets truly punished. Thus, no deterrent exists, therefore no justice is present. By prohibiting subsidiaries, every activity of a corporation is much more carefully considered and undertaken. Number 6. Subsidies. Subsidies defined. 1. A grant paid by a government to an enterprise that benefits the public. The Cognitive Science Laboratory at Princeton University. 2. In economics, a subsidy is generally a monetary grant given by government to lower the price faced by producers or consumers of a good, generally because they are considered to be in the public interest. Wikipedia. 3. A payment that a government makes to a producer to supplement the market price of the commodity. Subsidies can keep consumer prices low while maintaining a higher income for domestic producers. The University of Maryland Research Library Glossary. First of all, the government's money is the people's money. Therefore, the above definition should read, the people pay money to a private entity to get a lower cost at that private entity's elevated profit. To simplify it further, the people pay money to get a lower cost. This nonsense is worth repeating. The people pay money to get a lower cost. To put it simple, the people have just bought something twice. They paid the producer to make it for them, then they paid to buy it from a store. If one pays the producer to make a good or service, it is then paid for. There is no second procedure. Furthermore, if a good or service is of such importance to the society, the populace will already have voted for the construction of such a facility. The individualist pays for things only once, and does not use public money to the benefit of private entities. Nearly every subsidiary is rife with corruption: agriculture, coal, oil, auto, power, construction, private sports, and an endless stream of other private industries thriving off of public dollars. For example, farm subsidies. Subsidy payments awarded to farms are based on their production level. Therefore, the massive corporate farms get the largest subsidy payments. They use this public money to grow even larger until small farms, too small to be eligible for significant subsidy payments, are eventually driven out of business and forced to sell their land to these same corporations made tyrants by the people's money. Even Walmart is an empire built almost entirely on taxpayer money, yet it returns none of its titanic profits to the people. Subsidies are eliminated entirely without delay in the individualistic society. Corporate welfare in any form is an unfair advantage and the use of the taxpayers' money for the profit of private individuals. If needed, tax money will be used to erect such companies publicly owned, and their end product or service offered at practically cost to the people, to whom any profit made will be redistributed. There is simply no welfare for any individual or collection of individual in the individualistic society. All subsidies and grants or any other labels given to the act of lending the people's money to private interests are disbanded without delay. 7. The 2110 Law. Any member of a company which has over 2,110 employees, whose salary is at least 1% of the company's worth, is considered a vital mechanism. In other words, the individual is more part of the company than an individual, and thus pays the current company tax for his income rate as opposed to the flat rate of 12.46 paid by the populace. This keeps the profits of companies benefiting the populace and stops the hiding of profits by distributing them to the elite executives, while still allowing for substantial profits of said elite executives. Detail on page 84. G. Churches and temples. The individualists believe in and uphold the American Constitution when it states that Congress shall make no law respecting an establishment of religion or prohibiting the free exercise thereof. Therefore, the following is mentioned as a suggestion regarding religious establishments from an individualistic point of view. No holy place of worship should take donations without giving proportionate property rights in return. Too often, supposed holy men are corrupted and find it too easy to receive and give nothing but empty promises of illumination in return. This action suggested is an attempt to make these individuals more truly representatives of their faith, and to have them make better attempts at actually illuminating their students and making their establishment more focused on the religious instruction as opposed to money. Those donating are now part owners, and will consequently feel much more responsibility for the establishment and its members. This suggestion does not affect religion. It affects currency, which is the populace's property, and thus the property of all people of all faiths in the Union. But again, this is merely a suggested method of conduct and not a law.